Choosing a career is a bit like choosing an investment. And it is probably one of the most significant investments you will make in your lifetime. Professional accountants study corporate finance and statistics. A rudimentary knowledge of these concepts is essential to analyze any investment effectively. In this presentation, we'll look at an investment in a career as an accountant or an accounting technician. We'll also look at the traditional paths into each occupation and an alternative way to become an accounting technician using a self-study option. Among G7 countries, Canada has the highest level of post-secondary education. At SBA Canada, we believe that much or all of the post-secondary education for accounting technicians could be delivered online on a self-study basis. To compare these three options effectively, we will first introduce you to some basic corporate finance concepts involving the time value of money. Next, we'll examine the statistical concepts of median and mean. We'll also look at sources of statistical data that are, for the most part, unbiased. Finally, we will apply these concepts using a combination of common sense and a dose of professional skepticism. First, a word of caution. Investing in a career cannot simply be reduced to the financial return you can expect to achieve from your investment. First, let's start by examining some corporate finance concepts around the time value of money. Next, we'll look for reliable data. It turns out that the accounting profession significantly overstates Canadian CPAs' median income in a somewhat transparent attempt to attract new entrants with unrealistic salary expectations. For me, this is an excellent example of something referred to as plausible deniability. Once we have the data, we'll build the model and calculate the investment's net present value. Thanks to a gentleman by the name of Salman Khan of the Khan Academy, we'll take a look at some rudimentary corporate finance concepts.
The Net Present Value presentation by the Khan Academy provides a quick overview of concepts involved in analyzing investments. Specifically, the video deals with importance of interest rates and determining the value of an investment, or a set of cash flows, at various points in time. Without this understanding, we couldn't compare the value of different investments or business entities.
Check out the links to videos and articles in the Net Present Value Supporting Content PDF. These days the internet is a great source of information. But of course you have to pick your sources carefully. At SBA Canada, we like to use statistical data, published by Canadian and US-based government agencies. Often we'll use Wikipedia as a starting point, and sites like Investopedia, Bloomberg, The Globe and Mail, or the Harvard Business Review. As well, most professional associations have fairly reliable technical content. Check out the links to videos and articles in the Net Present Value Supporting Content PDF. The formula used to determine net present value is shown on this slide. It all looks very scientific and precise. But now let's look at the video.
The Corporate Finance Institute is a private Canadian educational service that provides excellent online training for persons engaged in corporate finance in a variety of industries from banking to public accounting. This video provides a useful explanation of how present value analysis is actually done.
Check out the links to videos and articles in the Net Present Value Supporting Content PDF. Despite how precise the formula looks, there's really a lot of professional judgment involved. For example, what discount rate should be used? You saw how the results changed when the discount rate changed from 10% to 11%. Since the model is very sensitive to the assumptions made in building it, net present value analysis can be used to prove just about anything. In this presentation, we will look at the net present value of becoming a CPA by going to university and then taking the 2-year mandatory PEP program. Next, we'll compare it with becoming an accounting technician by taking a 2-year course at a community college. Finally, we'll look at a self-study option geared specifically to preparing the student for a career in the accounting services industry. The assumptions we make will be critical. Now, one more thing before we go on to build our model. Once again, we'll go to the Khan Academy and look at a short discussion of some key statistical concepts. Check out the links to videos and articles in the Net Present Value Supporting Content PDF.
So, let's look at our assumptions. The education costs were taken from the Bachelor of Business Administration program at Thompson Rivers University in 2021. There were 24 core courses and 10 more within the accounting major component. Graduates are then required to take a PEP course from CPA-BC. CPA-BC says this course costs approximately $14,000 over 2 years. While PEP costs are the same for both residents and non-residents, most Canadian universities charge 5.288 times as much for non-residents for undergraduate programs. What appears a little unsavory is the fact that immigration consultants take significant fees from Canadian universities to sell their undergraduate programs to foreign students, and promise that attendance at a Canadian university makes permanent residence almost a certainty for graduates. In addition to education costs, we should also consider living costs, even though for many Canadian students, living costs are often paid for by the bank of mom and dad. Initially, we looked at the CPA-BC website to determine the salary expectations for CPAs in BC. However, we found a significant discrepancy when we looked at Work BC and the Canada Job Bank. The current infographic on CPA-BC's website points to a $16,000 increase in median salaries for BC CPAs from $100,000 in 2019 to $116,000 today. Based on our research, we believe that CPA-BC's numbers are overstated since they were based on a survey of members, while the Canada Job Bank used tax data, which is much more comprehensive.
Check out the links to videos and articles in the Net Present Value Supporting Content PDF.
We've seen the model in the video from the Corporate Finance Institute. We've looked at expected median salaries for financial auditors and accountants, and for accounting technologists and bookkeepers. One fundamental assumption needs to be built: we need to develop a discount rate. So, we went to Wikipedia to find the 25-year median return on the S&P 500. Next, we went to the Bank of Canada to get the average inflation rate during the same 25 years. Then, finally, we took 15% off the inflation-adjusted rate to allow for tax. Now that we've isolated critical pieces of data: 1. The median salaries of CPAs and accounting technologists. 2. Educational costs. 3. An estimate of living costs. And 4. A discount rate. We can build the model using the concepts discussed in the Corporate Finance Institute's video.
Check out the links to videos and articles in the Net Present Value Supporting Content PDF.
Here are the results. 1. Net present value of a CPA designation equals $398,848. 2. Net present value of a college certificate equals $370,226. 3. Net present value of the BAT self-study program equals $502,588. Remember, though, that the calculations are not meant to be precise. They're simply estimates. Also, remember that the bigger the net present value of an investment, the better the result.
When we play with some of our assumptions, it becomes clear that in this case the comparison isn't all that sensitive to changes in those assumptions. Decreasing the discount rate has very little effect. The reason that the CPA designation does better than the college certificate program is that the median income is higher. However, the difference is certainly not overwhelming. That stems from the fact that the education costs are much higher and defer employment income for longer. The clear winner is the self-study program. There is really no difference between the median incomes for graduates of the 2-year college program and the participants in the self-study program. However, income starts immediately, and there are no education costs borne by the student.